Brian Grimes, your real estate mentor, back with another action-packed session. Today, we're going to be giving our market predictions for 2024 as we're heading closer to 2025. We're going to get into the weeds today. So for those of you who like the data, the statistics, what the market's doing, definitely stay locked in. If you're new to the channel, like, comment, subscribe. Leave a comment that says I subscribed. For everyone who leaves that comment, I'm going to send you instant access to one of my free real estate trainings. It's going to show you how to acquire properties for pennies on the dollar all across the country. Don't want to miss out on that free offer. If you're interested in any of our programs, the Boots on the Ground program, where we find, finance, rehab, tenant, and manage cash flowing properties for you, definitely reach out, DM me, Boots on the Ground, DM me Boots on the Ground, or message me, email me, text me Boots on the Ground to learn more. Go through our presentation on that so you understand how everything works. And if it's a good fit for you and your family, we'll get you guys tapped in there. If you're interested in the ride along, unfortunately, the ride along, the tickets sold out today. So I warned you guys, the ride along tickets will sell out fast. We're out of tickets. The bus is fully packed. So if you want to get involved in the next ride along, you have to DM me ride along. Get your pre-order tickets for the next ride along. I don't even have the date ironed out yet, but we'll get there. But if you're interested, definitely reach out. And of course, we have the course content. It will teach you how I did over 300 deals in about 5 to 7 years doing the BRRRR strategy, which is what we're teaching you guys heavily here. We're also teaching you multiple strategies. For those who have been around, you know that. So let's dive into this thing, guys. I don't want to keep us here forever. If you have questions, comments, drop them in the chat section, drop them in the comments section. The link to the article that we're going to be going over today is in the description. So you can click in the description to get that link. And like I said, just stay tapped in. Let's start off with the mindset, and then we will continue to flow. The mindset for today is, if you want the things around you to change, first you have to change. For me, real estate was the change. I wanted everything around me to change when I first got started working, probably making less than, heck, at that time, less than $25,000 a year. And I wanted things to change. And real estate, saving all of my money for, putting all of my focus to, was to get my first deal. My goal with my first deal was to make enough cash flow, just like $1,000 a month or less, which is good money, right? Off of that first deal, and have that cover my student loans, cover some fixed expenses. And that would put me in a position where I would have a bit more freedom and I would be able to build from there. That was my goal. And I just saved. I did everything with that focus in mind because I wanted to change. But I knew internally, if I wanted everything around me to change, I had to make those changes. And you guys are all in that position. If you want to improve your current situation, even if you're like, yo, I'm check to check, what do I do? My answer is always going to be real estate. There's just a different strategy for you if you're starting off with limited capital versus if you have more capital and you're able to scale to the next level faster. If you have $50,000, $100,000 sitting around, you can scale in real estate really quickly if you have the right game plan, the right mentor that can show you the way. Or if you're in something like our Boots on the Ground program, where we can just go out and find the deals for you, connect you with the lenders, rehab them, tenant them, and manage them for you, you're not going to have to do very much. That's like the easy button, the fast button, right? If you're going out and doing this on your own, you're still going to want to save and learn and apply yourself. But if you're starting off with less capital, $5,000, $10,000, you're just going to want to wholesale first. You're going to want to learn about creative financing and seller financing first. You need to choose a different path. But real estate is that, to me, the best outlet. And we're going to talk about why and kind of what's happening in the future. But it's that best outlet available for scaling passive income on the side, for building a business on the side of your 9 to 5, and then ultimately scaling that up to the point where you can break free from your 9 to 5. But first, you got to change. You have to start making changes in your daily habits that are putting you in front of the right information to accelerate. Doing this, tapping into sessions like this, is part of that. So if you stay locked in, even just on this channel, you're going to start to accelerate in real estate. That'll be enough of a change, but keep changing your habits internally and you'll get to where you want to go. Let's get into this this article. Let me see if I could flip you guys. I'm going to flip you guys on Insta so you can see some of this article. It'll be smaller, but at least you guys can participate a bit. And let me get all the way into this thing. So let's talk about 2024, where the housing market is at, and where we're going to be headed in the future. I highlighted a couple of sections for our predictions that I think are a bit more important than others. So let's get into this thing. One, there's going to be higher cost for owning cars. There's going to be higher costs for all types of things, property taxes, HOA fees. There's going to be a bunch of things that are going to give you higher costs overall. But just think about this one. I thought this one was important, at least. There's a higher cost for owning cars, and that could impact the suburbs. So it's one thing to buy a home in the suburbs, counting on the cost of owning or leasing a car remaining fairly stable. Since 2020, however, besides new car prices rising by 30% to nearly 48,000, even used car prices have jumped by 38% to 27,000. So you can't even get a lemon for less than like 25,000 right now. In the last year alone, auto insurance also. So not just the cost of these cars, but the auto insurance has risen by 20% due to more damage from weather events, more technologically advanced cars, especially electric cars, and inflation. So these electric cars that are coming out, that price is increasing a bit. So you're seeing inflation there. And the government is going to start pushing that harder as well, to the point where in some states, they're going to mandate that you have an electric car. You can't drive that gas guzzler anymore. That's going to start happening as we go out in the next 2 to 3 years. And that's going to impact where people live, where they want to live, where they can afford to live. So you need to start thinking about these things and, keeping them in mind as you scale your operation and as you look for different places to invest. And like I said, there's also going to be things, I won't go through all of this, but there are also going to be things like increasing HOA fees, which you're going to see more in the suburbs than in the city. You're not going to see many HOAs in an inner city, but when you're in the suburbs, you're going to have those HOA fees, and they can double, triple. I just talked to a relative who had their HOA fees double in about 3 to 4 years. So as people are getting older, they're on a fixed income, they don't necessarily want those fees doubling. Or if those fees double on you on your rental properties, that's going to eat away your cash flow. So buying in the city, from what I'm seeing in the data, the city is going to offer the best opportunity overall for new real estate investors. If you want to build wealth, there's a lot of people out there who are talking about how to preserve your wealth and investing in certain pockets or A-class neighborhoods. If you want to build wealth, you need to look to the inner city. You need to look to the developing neighborhoods within the inner city, because that's where you're going to be able to build the most wealth. Let's talk about another wrinkle. And guys, if you have questions, comments, drop them in the chat section. We will hit your questions as we flow through. The next portion is AI, artificial intelligence, will force people to adapt faster than they predict. So there's going to be a rollout of AI that is going to impact real estate. According to an analysis by the International Monetary Fund, 40% of global jobs will likely be exposed to artificial intelligence, whereas automation and improving information technology have mostly impacted more routine tasks. AI expands this footprint into more high-skilled jobs. So what that's trying to tell you is, if you were investing in, let's say you were buying properties in like Austin, Texas. I want to buy multifamily in Austin. That's cool. But the people you're renting to on those premium rents, a lot of them are going to lose their jobs to AI over the course of the next 4 or 5 years. The rollout is likely to happen faster than anyone anticipates. And it's going to be very damning, I would say. So as this happens, you're going to want to start to cater your portfolio to affordable housing, because there's going to be a wave of people who are getting automated out, who now have to downsize. They have to cut back, and they have to look for affordable housing solutions. So affordable housing will be the wave for the next 10 to 20 years. So if you're somebody who's building co-living, like you guys know, we build the co-living properties in Philly, and we'll do that in our Boots on the Ground program. Or if you're doing like Section 8 and different government housing based voucher programs, even if it's not Section 8, if you just have familiarity with how to do subsidized housing, how to prepare your property, rent it out, remain compliant with the city, you're going to make more money than somebody who is going out and buying starter homes in nice rural areas, or in high rises, buying condos, or investing in commercial multifamily where they're not doing low income housing. They need more of a premium rent. They're going to lose those people a lot faster, a lot sooner. Let's get into a little bit more on this. And I see we have some questions popping in. As AI continues to improve, more advanced economies like the US face even greater risks and opportunities. So we're worse off than a developing nation, which could impact 60% of jobs. Of this share, about half will leverage AI to enhance productivity, but the other half, AI will gradually take away some of their tasks, and in some cases, their jobs. So, a lot of people will be losing their job to AI, and it will have an impact on real estate investing. As with climate change, the ways in which cities, states, and regions adapt to the rollout of AI will determine how resilient they are in the face of constant change. So you have to ask yourself, how is this city going to respond? So how are some of these cities managing their city currently without this rollout of AI, people needing more affordable housing? I would say affordable housing is already not being managed well. So you want to be a participant in affordable housing right now. If you want to make big money, get yourself some affordable housing like right now. As a new real estate investor, start to focus on learning about affordable housing opportunities, which cities offer the most affordable housing, which would be the affordable cities, which would be the top 10 cash flow cities, which Philly is one of, which is why we're there. So look at some of these things, and you'll be able to get ahead a lot faster. Somebody said, I invest in Philly, just turned 3 of my properties into Section 8, still in the early phase, just past initial inspection. Good. Stay locked in. Keep learning that process, and you'll accelerate long term. Just keep learning that Section 8 process, and you'll be better off than worse off. Definitely reach out if you have questions. There are ways to accelerate. If you already have 3, you're not too far away from 10, believe it or not. It's just a matter of scale. You could hit 10 this year if you wanted to. If you really wanted to, and you connected with the right lenders and the right construction partners, and you had all the pieces of the puzzle, you could accelerate. But it's good that you're on the journey. More people need to get on the journey, get unstuck, and keep pushing yourself. And I'll get to more questions. I want to tap into this last section, and then we'll lock into your questions. Here's a quick housing market summary and predictions. That's kind of in a straight line. You guys can click through the article, tap into the YouTube channel, Brian Loves Cash Flow, if you're on IG. The link is in, if you go to my IG stories, you can see the link, and you can click on there. Let's touch on some of the things that I want to touch on, like the 30-year mortgage. So the fixed rate mortgage, your average right now is like 6.88%, and it's going to keep going down. The projection is by 2028, it'll be at 5% or lower. If you factor in rate buy downs, you can get into the 4% range probably after 2025, sometime between 2026 and 2028. They don't know how fast or long it'll take, but you're going to get there. So that's going to open up an opportunity for you as a real estate investor to buy now, because the next projection I'm going to get into is not necessarily good for sideline people or people who are just window shopping and kind of watching the action, trying to market time. This is going to give you a little bit of incentive to get into the game. But for those who are in, like my guy, 4 Door Properties on IG, if you're already in, you're going to be able to refinance out later. So you're going to be able to pull your money out of these deals later. So this is a great time to buy. And then as rates fall, you can refinance out. Prices are going to go up. So let's get into prices. Home prices, after falling 0.8%, which is, barely falling at all. And that's nationally. So in many markets, they just kept going up. Year over year through December 2023, home prices tracked by the National Association of Realtors are forecast to rebound by 1.8% to 390,000 by year end 2024. So prices are already creeping back up, which we're seeing in all markets. By 2025 through 2028, given the large run up from 2021 through 2023, home prices are predicted to rise more gradually at about a percentage point above the rate of inflation. for an estimated increase of 13 to 14% from 2023 levels. So if you're waiting for a market crash, and I'm not saying that some markets won't correct, there will be some market corrections. I would anticipate those corrections to happen in markets like the California market, some of the West Coast markets that are way overheated. If they're not worth looking into if you're trying to generate cash flow or build wealth for the first time. Most of those markets make no sense. I would come to the Northeast. I would look at the top 10 cash flow cities because that's where everybody's going to be looking. Everybody's talking about it. Everybody's going to be looking there. If the sooner you buy in one of these top 10 cash flow cities, that's going to be the more money you'll make. Because if you're buying in early, people are going to bid up those prices over the course of time because they're getting priced out of everywhere. Now, investors are a bit more unlocked with today's technology and the systems and programs like the Boots on the Ground program, where I could tap you in if you're in Hawaii, if you're in Canada, if you're in Colorado, if you're in California, I can tap you into a top 10 cash flow city. So these opportunities are bringing in more investors. You're starting to get less of a local market. Real estate, I tell you guys all the time, is a micro local market. Well, it's starting to get more national in the sense that investors are looking outside of their local conditions because some of the local conditions at these interest rates make absolutely no sense. This is kind of a first time because interest rates were high before, but you did not have these high housing prices at these interest rates. This has never happened before. So now people are getting so priced out of their local market for the first time ever that they're looking across the country. And there are people like me out there who can tap you in from across the country or even outside of the country. So that creates a condition where some of these markets that are underpriced, they're not going to stay underpriced. And they won't be underpriced for as long as they used to be historically. So if you used to have a 10-year window to invest, it's going to be shortened to like 4 before that market just gets gobbled up. So stay locked in and pay attention and get involved. What else do we have here? I wanted to touch on rents and then mortgage rates. We kind of touched, but let's touch on these rents. Home rents, after rising sharply in 2021 and 2022, home rents continue to rise in 2023 at a much slower pace. For 2024, rents are predicted to remain stable and rise slightly for single-family homes. However, given ample new supply of multifamily units, apartment rents are predicted to fall slightly, while also offering concessions such as a free month to tenants if they sign a lease. By 2028, rents for single-family homes will rise faster than for multifamily residences. That's interesting. Let me read that again. By 2028, for those in the back of the class, by 2028, rents for single-family homes will rise faster than for multifamily residences, due both to the growing popularity of build-to-rent homes. I'll talk about that in a second, as well as the excess supply of apartments taking more time to absorb. That's an interesting statistic because a lot of you guys come to me and say, Brian, I want to buy multifamily. I heard multifamily is better. There's this multifamily guy running around. He just keeps pitching me multifamily, but you're saying singles can be good, and you like singles, and you like co-living, and you like. I like the data and statistics, and from what I've seen, the rental demand, because we are becoming a renters nation, a lot of your renters are people who used to be owners. In a past generation, these people would not rent. They are owner mindset, and they want a property that is to themselves. They don't want to live with other people. They don't want somebody in their apartment above them and below them. They're not at that stage in life. They're starting their family. Like a lot of people, before they started their family, they were already owned. Now people are starting their family and they're renting. So what that means is they need a family home to rent. And they're willing to pay a premium to not have to buy in at whatever today's rates are. Or some people don't have the down payment. So they're willing to pay a rental premium. These single family houses are trading at a premium in terms of rent, not only from people who would otherwise buy and own, but also in the affordable housing space, they're getting paid a premium. And I'm starting to see a shift. I think it was COVID that did this, But there's kind of a shift. People want to rent that single family home more than the apartment for whatever reason, unless you get into co-living. When you get into co-living, because the price is so incredible for the value, it's a unicorn product where people are just going to rent it anyway. So I'm seeing co-living fly off the shelves, and then I'm seeing single family fly off the shelves. Multifamily can, depending on the location, but we are seeing in some places of Texas, the multifamily apartments are just sitting vacant, and they're having to drop the rents and do concessions because of overbuilding. So there is a bit of that. And then we know that the rates are going to continue to fall. So guys, hopefully that gives you a good sense of the market and kind of what the market is doing as we get closer to 2020, the end of 2024 into 2025. This is what's going on in the market. This is how you should position yourself to get to the next level. Definitely take this data seriously. Click the link in the description. You can tap into the article as well. You can also get the links to book a call with me and my team, learn about the Boots on the Ground program, and learn about some of these things. You can tap into the next ride along, get your pre-order ticket. But just understand these things are serious, and this data is serious. So some people are going to get rocked as they're not paying attention. Let's go into some questions. Ricardo said, so as a beginner with little to no money, you shouldn't try to get a hard money loan, or is wholesaling really the way to go until you get more capital? I think you have to define what little to no money is, because some people are like, I got 30 grand, that's nothing. Some people are like 30 G's, that's like you're balling. So you have to define what little money is. I would say if you have 5 to 10,000, you want to look at creative financing first. So how to do subject to lease purchase options, how to acquire and control properties without needing the banks, and 10-20% down payments. That's your first avenue. Once you learn that, you'll be able to get some deals without dealing with the bank. Now, if you have like 20,000, I think that's when you can start to approach 20 to 25,000. You can begin to approach hard money lenders. And if you're dealing with the lenders that offer a lot of leverage, you can get a deal done. It's just going to be a small deal. So always start off small when you're new, when you don't know a lot. Start off as small as possible, and then you can always scale up. You'll make less mistakes or less costly mistakes if you start small. So that's what I would do. I have one, I'm trying to lock up at 300K single family rental in Northern New Jersey. The ARV is 520. So that's got what I call the developer spread, which is over 200,000. You can typically go into a property as long as there's a $200,000 spread between the purchase price and the after repair value. You can typically go in and do some type of renovation and generate income. Typically, that's the spread I like to see. Rents for $2,700 to $3,000 a month. My client investors need a built to rent portfolio loan. Can you help me get her funded before 5/15/2024? That's like 10 days. That's like 10 days. You better DM me. DM me, text me, however you got here, text back, email back, DM me, or you can click the links in the description, book a call, and we'll talk about it. I mean, you got like 10 days, so that's a hustle. Happy to help though. Four-door property said I got 5 doors now. That's good. Let's see, what other questions do we have? What is the average ROI on Boots on the Ground program? What percentage of investment will you expect to gain as part of the program? That's a good question. So how you have to factor in the return on investment of the Boots on the Ground program. Certainly there's a cost to be a Boots on the Ground member, right? The Boots on the Ground program, there's a fee to be involved. But if you think about the Boots on the Ground program logically, if I go out and build you a rental property, and at the end of that transaction, let's say you had 5 grand tied up in that property, and then whatever the cost of the service is. But I build you a house at 65 cents on the dollar, which means I built you 35% equity. How do I know I'm building it at 65 cents on the dollar? Because that's all the lenders will give us. And all the deals will connect you with 100% lenders to get them financed. They're only going to give us 65% of the after repair value. That means I'm building you a house. I'm finding you a house, connecting you with the money team. I'm building you a house at 65 cents on the dollar. So I'm building you 35% equity. the average home will appraise for something in the 200,000 range. So if I'm building you 35% equity on a $200,000 house, that's 70K. So just by nature of me finding you a deal, building it for you, not to mention the average rental property that we're finding in Philly, it'll cash flow around like 500 a month or more, right? So not only am I finding you a property that's going to cash flow you and probably get you like 100% cash on cash return on that 5,000 you have locked into the deal at the end, because we're doing a burst strategy. We're going to put our money in, refinance it out. Maybe we leave a couple grand in the deal, we hang on to it, and we cash flow. So you're usually seeing like 100% cash on cash return, but that doesn't factor in the fact that I built you $70,000 of equity, of tappable equity. So the ROI is insane. When you if you looked at your net worth, your total net worth, it's an insane ROI. I don't know what that number is, but it's, to a degree, it's an infinite return on investment, because whatever you invest in, you're getting back in the form of cash flow, equity, and there are lenders who will allow you to refinance your money out. Some will go up to, most of the ones we talk about and we project at 75% refinance, but there are lenders that'll do 80% refinances. If you start doing an 80% refi, you won't have any money locked in, most of the deals that you do. You get your money in. So how that would look is you would invest like 15 grand into a deal. At the end of the deal, we put a tenant in, you refinance the 15K out. You might even refinance 20 out. Put in 15, pull out 20. So you're up 5. It's cash flowing you $400 or $500 a month. And then you have all this equity in the deal. Even if it's not, 35 or 25, even at 20% equity, you have, another 40, 50 grand in most of these deals in equity. So your net worth is up. To me, it's the biggest no-brainer ever. I mean, I actually, and everybody who will like kind of talk to me, they're like, wow, Brian, you're more humble than I anticipated. Because I always will check myself, and I will have people to check in with at the end of the day. One, I don't think I'm better than any of you guys. Anybody watching this, I'm not better than you. I just started earlier than you, and I can accelerate you, but that doesn't make me better than you. You can certainly leapfrog me and do more than 300 deals in 5 to 7 years with this knowledge. I didn't have this knowledge when I did that. If I had this knowledge, I would have did 1,000 for real, because of market timing. But yeah, you guys can get involved. But I asked my brother the other day, I said, look, is this a good deal? Like, am I thinking about this correct? He's like, yeah. I mean, you're building people crazy equity plus cash flow. I mean, it's a no-brainer. And I asked him, would we have done this? And it's like, we would have. We were actually looking into something like this, but it wasn't set up in the way that I have it set up for you guys. I really have it set up for you guys as almost a one-stop shop where you can come in, get a deal, we connect you with the money, then we rehab it, then we tenant it and manage it. So we have it set up as a one-stop shop, and we'll do the Section 8, co-living, all that. So I didn't have access to this. If I had access to this, I would have definitely done it, because heck, you can get all into real estate, and I got all into it and I love it. So it worked out. But what if I got all into the real estate and I didn't love it, but I just love the money or the tax write-offs and the losses and the passive income? A lot of people are like that. I've actually found that most people want to learn real estate, yes, but they actually like having that done for you service, because it allows you to keep the time with your family. It allows you to stay locked in on your passion or whatever else you're doing, and let me and my team just build it for you and do it for you. We're happy to facilitate it, because it's not labor. It's not painful to me. To me, it's just life, for real. It's just waking up, breathing, grab a cup of coffee, real estate, building a house. I got a video today. A whole roof was blown out of the house. I'll post that tomorrow for you guys. Lock into the Instagram, lock into the YouTube shorts and the reels. But I'll post that for you guys. But that's just life. It's like, oh, the roof's blown off. No big deal. That was a big deal when I got started, but no big deal. But yeah, the Boots on the Ground program can definitely provide you guys with a lot of leverage. The only problem with the Boots on the Ground program is I can't build houses for all of you. I'm just one guy. And even though we've scaled our team and we have a big team, I still can't serve everybody who needs it. So we always have limited capacity. We can't build houses for everybody, and there's a waiting list to get involved. So we have like 1 or 2 spots open right now where you can get in if you're interested. I have 3 or 4 people who are planning on taking those 2 spots. So if anybody's interested, just reach out. And if you beat the others to it, you like, timing is everything. Sometimes people want to get in, like, oh, I want to get in, but I'm moving some money around over here. And it's like, okay, but there's only 2 spots. I'm going to serve who needs it. The squeaky wheel gets the oil. So I'm going to serve who needs it. But we can't build houses for everybody because I can't take on indefinite people. It would hurt the program. It would hurt the people who are already in. We don't want to create too much internal competition. So that's the only problem with the Boots on the Ground program. We just can't do it for more people. There is that physical limitation because we're physically building houses. When building a bedroom in a single family house, does it need to have a window and closet or just one of them? Yeah, you typically need a window and a closet. You don't need a closet for it to be a bedroom, but you do for Section 8. And you're talking about Section 8. Section 8 needs one window at least and a closet. So if you've read things like the Section 8 Bible, you've seen people who have blocked out certain windows. Like they might go in and block out a window, just brick it up because it's cheaper, and try to save some money because they know they only need one window. So if you go into a property and it has the bay window in the back bedroom and it's like 5 windows, you're like, man, I'm not trying to drop $250 per window on this Section 8 property. You might just box out some of the windows. So some people do that. But for Section 8, yes, you do. You do need that. Although I have filed, somebody said they filed the taxes. That's good. Let's see who else we got. Any more questions? And then we'll wrap it up. Let me get back on here. What is the best loan? It depends. You guys got to reach out. People are asking about loans. I need help getting a loan out of someone's name. Reach out. So guys, hope this helped. Stay tapped into this information. It's important. It's going to get you to the next level. If you got value, like, comment, subscribe, leave a comment that says I subscribe, share the content with someone else who you want to get value, and just stay locked in, guys. Now is the time. If you miss out on this opportunity to get into real estate before prices go up, they're projecting like 13, 14%. I think prices are going to go up. They're going to double and triple in some locations. In affordable cities, they're going to start doubling and tripling. People are going to be shocked. Some people think I'm crazy. Oh, Brian, you're very confident about. I'm not confident about it. I've just seen it happen. So it's not a matter of, I feel like being confident about something would mean like you're really making a prediction that you're kind of guessing on, but you're confident in your guess. I'm not really confident. I've just kind of seen it, and I'm looking at it happening and unfolding again. So I actually have no confidence in it. It's just a fact. It's not like I want it to work out this way. I don't care if prices go up, down, sideways, left, right, backwards, forwards. I really don't care. It's all going to create an opportunity. And if you know how to navigate the market and free think, which is what we're here to teach you, what I'm trying to teach you guys is how to think your way through the market. If you know that, then you won't care either. So I could care less what the market does. I just want to know what it's doing and why it's doing it so that I can navigate and put myself in the best position and give you guys the information so you can start to align yourself. But these articles are here for you to read them as well. You can make your own decision. You can say, Brian, I think you're wrong. And then we can see who's right. I can tell you I've been right way more than I've been wrong over the years, but we'll see. So take that wait and see approach, factor in the data, and just stay locked in, guys. Brian Grimes, your real estate mentor. I'll see you guys on the next one.